Hello, traders. It's 8:02 a.m. in Chicago. Actually, I'm not in Chicago. It's 9:02 Eastern on Wednesday, the 8th of September, 2021. This is episode number 2068. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looks like we're pulling back a little bit today, although not by much. The S&P is down 3 points versus yesterday's settle. The Dow's down 22. The Nasdaq 6.75 down to 5, up to 5.5, and so on and so forth. The Russell's off 3.6 points. And the Euro stocks and the DAX much lower. The Euro stocks and the DAX had a driving open. They drove down the DAX over 1%. Clearly risk off for today. Crude recovering a little bit, pushing up against the $70 mark again. Gold unchanged. Silver's a little bit off. Copper was off a little bit deeper, but copper in general is in a sideways market after rallying. Copper's forming what looks like a bull flag on a daily. And then the notes and the bonds are actually higher this morning. So mild risk off sentiment as a result. Overall, key earnings today, we're not seeing anything pre-market that is significant after the market. We go Lululemon, Athletica, and GameStop. GameStop being a key meme stock, and ABM Industries. Scanning the headlines across the Wall Street Journal, Reuters, AP, and so on. Seeing persistent input inflation. This is something that Sherwin-Williams flagged up this morning. The cost of materials is staying high. This includes building materials and so on. Inputs, including foodstuffs, is staying high and therefore forcing consumers to make other choices. And that's hitting Sherwin-Williams. The paint company is warning that this is likely to impact earnings. Japan prolongs a state of emergency due to COVID, and ECB may normalize sooner than expected, according to an ECB person this morning. In terms of the events, economic events for today, U.S. IBD tip economic optimism at 10, JOLTS job openings at 10. We have a 10-year auction at 1. API crude oil stock change. Remember, we don't get EIA inventories today because of the Monday holiday. They're pushed to tomorrow. And we get the inflation rate out of China. This is a key figure, as well as PPI. The S&P currently is in a multi-distribution profile. Again, it was trading mostly sideways in the bulk of yesterday's trading, in between somewhere around 45.15 and 45.24, when Europe opened in a down drive, dragging the S&P down with it to push through 4,500. There's some interesting structures within the S&P to talk about today. And what that did is it formed a double distribution profile. We've come back, the S&P has come back to its overnight point of control, 45.15, pushing 45.15, and essentially being stuck between yesterday's settle and today's full session mid, full session VWAP. So what's important about the S&P today is it's pushing high volume, relatively high volume. It is above the one standard deviation of the last 252 days of overnight volume. As you see there, 271,000 is the first standard deviation. We're at 286,000 in terms of volume, rounded up to the nearest thousand. And then in terms of mode of the range, meaning the most common range, which is 23 points, we're at 27.75 points. So we have high volume and a relatively high range. The overnight inventory is 74% short, 74% short. and that's where we stand this morning. So that's the recap. For those of you who didn't know, there was a pretty decent drop in Bitcoin, a bit of a flash crash in Bitcoin yesterday, last night or yesterday, as it just opened up way up here and flashed all the way into the 42,000 handle and has been trading sideways. We see that same move taking place across multiple crypto assets, and is causing a lot of noise and jitter. But this is an incredibly volatile product for its size and its market cap. But this is something that's on watch for today, of course. Let's take a look at what was expected yesterday versus what we got yesterday. Remember, we had the complication of the holiday, and so we had an extended overnight session that started at 6 p.m. Eastern on Sunday, and it carried through all the way into 9:30 Eastern yesterday. So you had 2 days of overnight data. And the key figures to remember are the 20, 27, 40, and 45, and our scenarios were built on that. The expectation yesterday, the key expectation is we're likely to dip lower and then start pushing higher into and retesting that 40. Remember, the 40 has been played several times here, expecting it to test back into this upper distribution. That first scenario did not work out. The secondary scenario is an attempt higher and then a dip into 27, consolidated to 27, push to 20, and then consolidate to push up. That did not work out either, although the shape is about correct. It doesn't matter. Overall, yesterday's action was mainly a bit of a drive on the open. It was hard to determine the opening swing high, but we opened at 30.75, went to 32, and then we immediately pushed lower, consolidated right here in the 22 range, where you could see we had several tests, and then we pushed lower into the 20, and we actually exceeded it to get into 1075. Now I want to remind you that last week's low was 1050, so we missed last week's low by one tick. We had relatively high volume yesterday compared to most days last week. And again, we tested that 1050 low from last week, missed by a tick, pushed right back into the mid and VWAP of the day session, pulled back to a higher low. If you're a Convergent member, I urge you to listen to the AMA that we did yesterday afternoon to discuss some of the signals that were put out. And the reason I said after that 45.11 low, 11 quarter low, I said that the low looks secure and to look for longs at that point. I provide the reason why I stated that before this rally back into 27. 27 being a key figure. 27 is the MC point of control of this area. If I turn on the master levels, you can see the 27 right here is the MC point of control. We tested the MC point of control from below. We paused at it in the morning, but overall in the morning it seemed like there was a higher time frame in play and squeezed right through. So we tested from below the 27 and ended up finishing at 20, forming this nice composite high volume node. The MC point of control was actually at 45.20 before we shifted it up to 45.27 last week. So pretty well structured trading yesterday, but there was definitely a ton of noise, being that the push lower after the open was well facilitated. But beyond that, it seemed like we had the NASDAQ pushing highs, the S&P pushing lower. We had weakness in a little bit of weakness in the Dow and the Russell. Breadth was pushing lows while the S&P was pushing higher. The Nasdaq was pushing higher. It was really difficult to clearly see what this thing intends to do or what the overall context wants to support. You know, looking for shorts mainly, but overall having a hard time holding and squeezing and holding lows once this test of the prior week's low right here, prior weekly low, was tested. Okay. Yesterday had also the distinction of not taking out the initial balance, statistic. Now, on a driving day, this is more likely to happen by virtue of the fact that on a driving day, the range gets put in the first hour. So that's the initial balance, and then the market has a hard time pushing a wider range even farther. But it doesn't matter. Historical probabilities state that the IB high or the IB low will likely be breached, meaning it'll go through it by a tick, about 98%, 97, 98% of the last 1,500 to 2,500 days, so, or sessions. So very interesting that we did not capture the IB stat at all yesterday, and we held sideways and formed a point of control that shifted down. So we had a lower high, lower low, and yesterday we triggered off one time framing down. One time framing, 1 TF down is what it's called, one time framing down, which means that we have taken out the last low and we put in a lower high, and we are starting a downtrend on the daily. And if we take out the 1075 or the 1050, we would be taking out last week's low, which would put the one-time framing up on the weekly on hold, which may, and I emphasize the word may, precipitate some selling through 4,500 and a push towards 4,450 and the levels we have, the myriad of levels we have in the 4,500 handle. There's quite a bit of structure down there that we have not tested or tagged. Let's take a look at what we did since then. Well, that didn't take out many lines. Let's take a look at what we did since then. We reopened, and like I said, we went sideways in the overnight session. We basically went sideways until Europe opened. Europe opened at 2 a.m. Central, and immediately we have European sellers, Europe coming in as a seller. So we formed this upper distribution early on, and then we create the second distribution with the LVN at last week, yesterday's low and last week's low at 1075. So again, we did breach that low from last week in the overnight session. We've pulled back. We pulled back to settlement in the overnight session, which was 45.19 and a quarter. Yesterday's close is 45.19 even. We've pulled back to settlement, and we have held, and now the S&P is sandwiched between settlement, which is the official closing price, and the current full session VWAP and mid. So we're in a compression here in the S&Ps. You could see the trend line kind of forming in this way. So we want to pay attention on the open. Again, we're on top of the overnight point of control, this most traded price right here, and we want to pay attention on the open. We want to pay close attention on the open to see if we squeeze through settle and we start to work ourselves back to the 27 again, and what we have above here is basically an excess that was left from yesterday's, from the overnight session, Sunday night and Monday, or if we attempt to squeeze settle back at 20, fail to do so, which would be just the ideal situation for a day trade, fail to do so, turn over, make an attempt, lower high, and that triggers off a short targeting 1050, 1050. 10 even is the high, is the high low of the gap zone. Once we get into 10 even, we are likely to push through the 4,500, and then we start to work ourselves down into the 4484 high volume node and areas below that. So we have pretty good structure for a decent selling spree. You can see how it has rolled over. You can see how this is kind of rolling over and has created a market structure high formation on the daily. Let me show you that. So let's take the daily here, enhance it, clean it up. So this is a classic market structure high, higher low, higher low, higher low, higher low, higher high, and then lower high, lower low, and generally a market structure short occurs at the bottom at the bottom of the rotation, the pivot bar. The following bar, the rotation of that at 45.20 would trigger a swing short, and would bring us back into the 4,500. We have a prior high at 44.98 or so, and then we start to work ourselves through the 44 handle back to 44.80, 44.50, and so on and so forth. But this is a pretty standard market structure high, and you can see lower high with the breach of the low. That ends the one-time framing up, and then yesterday with the lower high triggers one-time framing down. So on the daily, again, according to the auction process, this brings in the sellers. It brings in a new selling trend. So you can see that we're opening at the lower end of yesterday, and we are likely to break lower and push into the next key area. Okay, so remember 44, 82, 84 would become the next big target. 82 is the point of control from last week, becomes the next key target. Then below there 75, 75 the old high, and then push into, look at this, a double MC point of control for the week right there, and we're quickly back to the 44, 37, 38, 37, 38. So if these funds and all of this sitting cash would allow this thing to fall, the key target would be the 44.82 first and the 44.37 on a swing basis. Okay, I hope you can follow the logic there and why we expect this, but this is what we're looking for today, and it's starting to show signs that it's about to turn over. Okay, so that's the composite. Let's take a look at what's expected for today. In either case, today's one of these days where you want to really be focused and participate. In my opinion, I believe that we're likely to see some pretty decent action today. Stock zones, master levels. Okay. So the first scenario here, we have a red candle right there. I'm looking for this to bounce up, make an attempt at the 45.20, 27. Okay, those are the key playing areas. 27, 35, 40, 45. These are the key milestones on the map. Okay, and beneath us is 1050, 1050, and then we fall into the 45, the 00 right here, and then the key target becomes the 44.82. 82 becomes the big play if we start to roll over and we get into Friday's range here. looking for the 82. 90 had some support. This area, 90 had some support. There's a stock zone there. But overall, we're looking for 82. So looking for it to test the 20, consolidate, chop, 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 and I'm looking for it to release, break the weekly low, and make a run for 4502. 4502, consolidate at the 4500, and that would give us about 20 or so points of range. Consolidate here for a while before giving it up and pushing even lower later in the session. So I'm expecting the market to rotate lower, and there's some indications already that it's doing so. The secondary scenario defies this play, pushes 45.10, consolidates at the 45.10, gets back to the 15, pushes the 20, back to 27, and then this will have caught late shorts in a pretty bad way, and this is likely to fuel a pushback to last week's settle up here at 45.34.5 or 45.35. This is what I'm looking for here, giving us about 30 points of range. So these are the two key plays we're opening in range out of value of today. But you have your map. You have your 20, 27, 35, 40, 45 up, and you have your 10, 50, 0200 area. So let's put that in here, 0200 area, and then we start to slide into the 45, 94, 90, 82, 82 being the key level to test below. And if it's not able to hold the 82 over the next couple of days, then 37 becomes the key target below. Do you all follow the logic of this? Because it's really important to me that I'm not just spewing this stuff out, but that you're understanding that there is a story, there is an auction, there is a process. It is a price discovery process. It's a price discovery process. The market is constantly looking for value, and it's trying to figure that out. Here's the problem. The problem is moving from that point of view, moving from looking, standing on top of a mountain, looking at the valley, to actually pulling up a scope and being to find a particular, read a particular street sign to guide someone around the town. That's the part where the execution comes in. But if you understand the overall picture and you keep a high time frame chart in play, like keep a high time frame chart in view. I keep a 30-minute, this 30-minute that's in front of you here. Keep that in view and at least memorize or write down or note or something the key areas that are likely to be tested. You can trade against those areas, in my opinion. You can lean against those areas and make some really strong trades where you can get 2, 3, 4, 5R, hopefully. This is what this process is for, to walk you through. It's easy to lose a thread on where the auction is and what the auction is doing. And my purpose with these Trader Bites is to keep reinforcing that. Hopefully that's working for you. Good luck. Don't forget, tomorrow's rollover. It's official rollover Thursday. Tomorrow, your data feed, if it's automatic, will shift to the December contract. I'm intending to hold through Friday, to hold the same levels into Friday and force the U21 or U1 contract through Friday, and then we'll switch to the December contract and roll before the open on Monday. Okay, so don't forget, we go into rollover, so your delta and your volume is going to be highly impacted by the fact that calendar spreads come into effect. Hope that's good information for you. Good luck. Talk to you soon.